So the IFRS is a nonprofit organization established in Delaware, USA. The basis of their establishment is basically that they believe that better information equals to better economical and investment decisions. So the purpose of IFRS is to create high-quality global standards that contribute to resilient capital markets. The IFRS standards are applied in over 140 jurisdictions, and they consist of two boards, which is IASB and ISSB. For the first 20 years of the establishment of IFRS, they focused on creating accounting standards under IASB. And due to the incorporation of sustainable information with economical and investment decisions, ISSB was established. So the IASB is the International Accounting Standard Board, and the IASB is actually a group of experts from similar backgrounds in setting accounting standards, preparing, auditing, and using financial reports, and also they also have a background in accounting education. So the members are responsible in developing and publishing the IFRS accounting standard and the IFRS for SMEs accounting standard. They are also responsible in approving the interpretations of IFRS accounting standards. As for ISSB, it is the International Sustainable Standard Board. Their establishment was announced in 2021 in Glasgow after receiving a strong market demand for its establishment. So the responsibilities of the members under ISSB is to provide high-quality global information on sustainable related risks and opportunities in investments done. ISSB is also supported by the G7, G20, the International Organization of Securities Commission, Financial Stability Board, African Financial Ministers, Finance Ministers, and bank governors from more than 40 jurisdictions.
Assalamualaikum warahmatullahi wabarakatuh. My name is Ana Sorai binti Muhammad Shafi'i and matrix number 2217056. Today I will be presenting under the subject TMGT 2314 Financial Accounting on the topic of IFRS, who we are. I will be presenting about the standards objectives, the highlights, and the conclusion. Now let's start off with the standards objectives. We have two standards here, the IFRS accounting standards and the IFRS sustainability disclosure standards, in which the IFRS accounting standards were derived from International Accounting Standard Board, IASB. Meanwhile, IFRS sustainability disclosure standards were derived from International Sustainability Standards Board, ISSB. So, what is the standards objective? For the IFRS accounting standards is to ensure a standardized accounting principles that apply in financial reporting and adopted by as many jurisdictions and countries as possible to bring everyone on the same page. It ensures that everyone follows the same universal guidelines and adopts a universal way of reporting business activities. Next up is the sustainability disclosure standards objectives is to becoming a objective to provide a high quality, globally comparable information on sustainability related risks and opportunities as indicated by feedback from many consultations with market participants. Next is the IFRS highlights. First up is about IFRS. IFRS is an abbreviation of the International Financial Reporting Standards. This foundation is a not-for-profit public interest organization established to develop high-quality, understandable, enforceable, and globally accepted accounting and sustainability disclosure standards. The IFRS standards are developed by the two standard setting boards, the International Accounting Standards Board, IASB, and International Sustainability Standards Board, ISSB. Next is the mission. The IFRS Foundation was founded on the belief that better information supports better economic and investment decisions. As a public interest organization, IFRS worked to achieve this mission through the development of high-quality global standards that result in corporate information that informs investment decisions. This work contributes towards efficient and resilient capital markets. Moving on to the importance of the IFRS standards. The IFRS accounting standards and IFRS sustainability disclosure standards are developed using the same rigorous, inclusive, and transparent due process. The two boards ensure connectivity in their work to enable the standards to operate effectively together and to support connected reporting, building on integrated reporting and management commentary. Is the funding. The trustee of the foundation are responsible for the organization's funding. The trustees' responsibilities include appointing members to and establishing the operating procedures to the IASB Interpretations Committee and Advisory Council, and approving the foundation's budget. They are accountable to a monitoring board of public authorities and the IFRS Foundation Monitoring Board. The IFRS had gained two types of revenue. There are earned revenue and contributed revenue. For the earned revenue example is by licensing the intellectual property. A licensing agreement allows companies and other entities to use the IFRS standards for translation, publication, or commercial use. For the contributed revenue, there are voluntary contributions such as contributions from jurisdictions, ISSB seed funding, philanthropic grants, and contributions from companies including accounting firms. Moving on to the IFRS structure. Basically, the IFRS Foundation has a three-tier governance structure based on the two independent standard setting boards of experts, the International Accounting Standards Board and International Sustainability Standards Board, IASB and ISSB, governed and overseen by trustees from around the world, who in turn are accountable to a monitoring board of public authorities. The IFRS Advisory Council provides advice and counsel to the trustees and the boards, whilst the boards also consult extensively with a range of other standing advisory bodies and consultative groups. We have now arrived at the conclusion of this presentation. A standardized format in accounting procedures is indeed significant in determining and analyzing the business. The IFRS Foundation possessed the four elements of accounting principles, in which is transparency, consistency, comparable, and universal. Thus, the establishment of the IFRS is not just to establish financial standards, but also to help in achieving business objectives, analyzing the business current financial conditions of the investors and other business entity in an organized, structural manner. That is all from us. Thank you for listening, and Assalamualaikum.